All right. So welcome back from the exam. Okay, we only have two more chapters left to go through, okay? Chapter 12 and chapter 13. Now, chapter 12 is payroll, right? Definitely something important that you should definitely consider because this is part of your business, right? If you're going to open up a business, you should kind of plan for having people to help and help you operate your business. Okay. Now, of course, with payroll, right? There is an example that we're going to be doing tomorrow. But, however, chapter 13, we won't actually cover chapter 13 until again a couple weeks from now. Okay. So, um, because chapter 13 is going to involve the case project that we're going to be doing together, okay? So for now, let's just focus on chapter 12. Let's take a break off of what we learned from chapters 2 through 11 for now, okay? And let's see what happens for payroll, okay? Payroll, once again, payroll is going to be one of those costly parts of a business, right? Because if you really think about it, your business is actually broken into three categories, right? You have the people that you sell to your customers. You have to buy products from other people, so those are your vendors. And of course, you need to hire people to work to help you manage your business, right? Whether it's if you're doing a retail store, you need someone to run the cash register. You need someone who makes the product or who grabs the product for you, etc., etc. You need to find some kind of way to make sure that you profit, but not only that, but be efficient. Okay. Now again, when we talk about having a business with employees, we need to consider, right? Since it's a huge portion of your business, it's 1/3 of your business, you have to know that it costs a lot of money to have employees, okay? Especially because these kind of employees, it's not like a regular expense where you get to pay them once a month or pay them from time to time. No, it is a standard, frequent, fixed payment. You have to pay your employees every so and so often time. Okay, so these people cannot be the ones that you cannot say, oh, I'm sorry, you're gonna have to wait till next payment. No, right? Because they're not gonna work for you if you don't pay them. So this is going to be one of the largest expense that has to be maintained at all times. And what those costs include are going to be obviously compensation, right? You need to pay to have him to you need to pay your workers. You also need to pay taxes on those workers, and you also need to pay into those benefits that you provide those workers and any deductions that you may have to take away from those workers. So again, they are one of the more complex portions of this because payroll is very complicated. Okay. Well, first off, in order to even have employees, right, you need to establish a employee identification number or some kind of taxpayer identification code. Okay, this is the code that you need to get from the IRS because again, if you are going to be paying your employees, right, there are some federal and state taxes that you have to keep and be aware of. And that means you're going to be owing the government more money. So again, it's very important that you do get some kind of taxpayer identification number. So a lot of it's the tax ID number. The tax ID number is usually going to be a 9-digit number. Now, let me tell you the difference between a social security number versus an employer identification number. A social security number, right? We all know this. It's a way that identifies us as a United States as us, right? As a person, right? Now, in this case, the social security number comes from the Social Security Administration. All right, and usually the number usually goes in a 3-digit, then 2-digit, then 4 digits, right? So at the end of the day, it's still a 9-digit number, and this is a way that we use to identify you in the system. So when we pay taxes, right, we have our own individual tax identification number. That is what a social security number does. Okay? It identifies you. All right? So the difference between this, right? This is for individuals. Now, if you are a business, right, you will get your own individual employer identification number, so EIN for short. Okay? And where this is distributed from, it is distributed from the IRS themselves, okay? Not the Social Security Administration. This one's completely different. This is directly from IRS because, again, you're dealing with federal money. So in this case, it comes from the federal IRS, okay? Now, again, for any businesses that is a sole proprietor, partnership, corporation, whatever kind of business establishment you are, you will be needing a identification number. Okay, so usually this is how it looks. It's going to be usually a 2-digit number, dash, and then 7 digits after. Okay, that is how you can tell the difference between an individual and a business. Okay, you still get the same 9-digit code. The only difference is one is displayed differently. You have 3 sections, 3, 2, 4, where this one is 2, 7. Okay, that's how you can identify a person versus a business. Now, for those people who are independent contractors that use their social security number as a way to identify them, yes, you can do that. But remember, as an independent contractor, there is a few rules and regulations that you need to know if you're going to be using your own social security number. Because when you file taxes as an independent contractor, right, you're right. All of those taxes are going to come from you, not your business, right? Even though you are your own independent business, right? In this case, that's one of the exceptions of that form where you have to fill as a 1099, where you need to use that specific independent contractor number, which is going to be your social security number. Now, of course, an independent contractor can apply for an employer identification number. That is completely valid. Yes, you can. But for independent contractors, usually you're identified through your social security number. Okay, so that's a huge difference there. So once you get your employee identification number, right, how do you get one? Well, here you go. You could go to the IRS and sign or submit a SS4 form, which is for you to apply for a employer identification number. Usually, this form actually, when you actually apply for your business license, usually this form actually comes with it. So then you, if you do get approved of your business, you automatically should also get an identification number as well. Now, it depends on which site you go to apply for a business license. If you're actually going to like a actual, if you're going to go to the actual IRS location, of course, then you're going to do everything paper. But most cases nowadays, you can apply for a business license online, and they do have this form with it as well, because if you do get approved of a business license, you should have your own separate business identification number. Okay? But this is how you fill it out, right? You're going to fill out what you got, what you are. So again, this is upon receiving your business license. Very, very important. That's why usually when you apply for the business license, it's simultaneously. So once you apply for your business license, right, what is your legal business name? Okay, because what does the IRS identify you as? You need, if you're just for example, Target, no, you need to be Target Corporation. That's the legal name that you are identifying within the IRS, right? It's not what people know you as. In this case, we're looking at legal name, and then what is the what is your address and all that information. And do you have employees? And if you do, what are they? Okay. So again, you will have to remember the importance. You have to apply for one if you are going to have employees, if you have excise taxes, so again, special taxes. Also, if you are in the business of selling alcohol or tobacco, you need to apply for an employer identification number because, again, these have special taxes, right? Okay. And the government wants to make sure that you follow those guidelines and follow those rules carefully and make sure that you do pay those, okay? So again, it's pretty straightforward when you file this form to receive an employer identification number. Okay? So once you've done all that, now let's talk about the types of employees that exist. The list goes on, but you know what? These are the common ones that you actually normally see here right now, currently in the United States, right? But if you actually visit the irs.gov and you go to publication 15, the list goes on, right? What do you do when you have an employee who's a family member, right? What happens if you have an employee that is this, right? An agricultural worker, right? They fall under a completely different category than a regular employee, right? So all of those, again, there's so many rules and regulations and different employees that exist. But, however, workers. So in this case, I'm just only going to show you 6 of the more common ones that you normally see here right now. But the reason why I highlighted your common law and your statutory employees is these 2 people are the people that are actually going to show up on your payroll. Everybody else are mere expenses to the company. They're just, you write them off as an expense. You just pay them as an expense. You don't consider anything about them, okay? And of course, you have to file the proper forms for them. But in this case, these you don't do anything other but pay them for the job that they complete, okay? Where the common law and your statutory employees, these people are the ones that you're going to be paying federal insurance contribution at, so Social Security, Medicare. You're going to pay into them for working at your business, okay? So there's taxes that you have to cover for these 2 individuals, while everybody else, you don't care about them. You only strictly pay for what the task was at hand for. So the other 4 are just mere expenses to the company, okay? So let's break it down and talk about every single one of these, okay? Starting with common law employees, or also known as your regular employees, right? Your regular standard Monday through Friday, 9 to 5 type of worker, right? Now, what makes a common law worker completely different than everybody else, right? And I'll tell you this, it is based on the amount of control you have over this employee, okay? So what do you mean control? That means you need to designate what can they do or what do they have to do. You need to designate the task. You need to tell them when they need to show up, how they need to show up. Like, do they need to be dressed up in a uniform? Fourth thing is you need to tell them what their task is and how to get it done. So here's the thing, right? The key word is you give them a task and you tell them how to get it done. And the last thing is you usually supply your employees with everything that they need to get the task done. So that means you have 100% control over the employee on what they can and cannot do. Okay? So that's the huge characteristics of what a common law worker is and how different it works with all the other ones is how much control do you have over this employee. In this case, you have 100% control, right? You need to designate, right? Most cases when you apply for a job, the boss is required to give you a list of your tasks and duties, and you cannot go beyond that, and you cannot go below that. Okay? You have a designated list of items, tasks that you are expected to do, right? You're expected to show up Monday through Friday from 8 a.m. all the way to 5 p.m., right? You clock out for lunch at 12 o'clock, and you clock back into work from lunch at 1 p.m., right? It's a schedule, and what the task is that's what you're told to be doing. You're provided either an office, you're provided the equipment that you need to get the task done. So that is a common law employee. So in this case, straightforward, right? They pretty much are your regular common, they're the regular workers that you normally see that's on a steady pay, on a steady schedule that is constantly coming in frequently, okay? So we all know what a common law employee does. Now, what is a statutory employee? So a statutory employee works for the company. The only difference is how they work, or whatever their job entails might not require them to come into the office at specific times. So a great example will be a truck driver, okay? A delivery truck driver, right? Yes, their job is to come into the office, but that doesn't mean they can clock out at 5 o'clock because they're driving, right? So the task that is being told of them cannot be measured in time, right? But, however, time that they are designated to go into the slot window, right, they're still, number one, you're still reported to work. Still, number two, your task is to deliver or pick up some supplies from the facility and bring it to the store, right? Okay, and of course, you are told what to do, right? You might have to show up in a uniform, and so on and so forth. And then the company should provide the delivery truck for the individual. So the only difference here is the time frame. Okay, yes, they don't have to necessarily show up Monday through Friday, 9 a.m. to 5 p.m. Right? They might have to show up maybe Monday, Wednesday, Friday, Saturday, right? And because between those times, especially for truck drivers, you can't predict when they will finish the task done. So that's the difference here between a common law versus a statutory, is that common law is a strict schedule, where a statutory, they work for the company, but their task determines the length and time. So their scheduling may not be the same every single time that they have to come in, right? So that's the huge difference. However, they are a full employee because the company has majority control over what this employee does. Okay? The only difference that they cannot control is the time. Okay? All right? So, again, so a truck driver would be a example. I already gave you that. A full-time life insurance person. Okay? Yes. All right? So, any questions so far between the difference between a common law and a statutory? Okay. All right? So these two types of employees, right, they fall under the payroll list. That means they are someone that we have to pay on a consistent schedule as well, right? They are the ones that we're paying into their taxes, right? Okay, and we'll talk more about that right now, okay? So again, the difference between the two we talked about is, well, basically, they all are being controlled by the company. The only difference is based on the time. That's like the smallest difference. But not only that, here's another difference between the two, all right? Because common law employees, because they are there, they have to report on a specific time frame, right? These employees are going to have to pay into their federal income tax withholdings, okay? So that means, again, if they're going to be working under your company, they are subject to have to pay into their own federal tax employees. So it says employers must withhold, okay? Meaning the employer must take that out of their paycheck to pay into the federal income tax, right? Because everybody that works has to pay income tax, okay? And that is what the common law workers are required. And of course, we also must withhold taxes for benefits, okay, such as FICA, which is Social Security and Medicare, right? While the statutory employees, they're not required to pay into their federal income tax. However, we are required to pay other taxes such as their Social Security and Medicare, of course, their benefits as well. But this one, they don't need to pay into their federal income tax withholdings. Okay, so that's another difference between the two, right? Because in this case, right, you have someone that's coming in on a constant daily basis. Where this one, you're not really, right? All right. So that's the difference there. All right, so let's talk about the other 4 types, which we call them mere expenses to the company, right? Why? Well, let's take a look here, right? Because if the contributing huge factor to tell the difference between these workers is based on the control, what difference does it make if they are a statutory non-employee? Well, let's take a look. Statutory non-employees, right? They are non-employees that basically are treated as self-employed and not really like they work for themselves, okay? So a great example is going to be a real estate agent, right? Are they required to come into the office whenever they want? In this case, they get to come in whenever they like. They are not required to come into the office from 9 to 5 on Monday through Friday, right? They can come in as they please, or if they have a client, then they come into the office. But most cases, real estates, usually they go in to, file paperwork or whatever they need to get done, right? If they have a client, they need to work to fill out the paperwork. But in this case, they are not required to come into the office all the time, right? And they serve for themselves, right? Especially for real estate agents, right? They are all about commission-based, right? They all go into the same office. They all share a common room, right? They all share one office. However, every individual real estate agent, even though they're working for one company, they all serve different aspects, right? They all are for themselves, right? They are treated as if they were self-employed, okay? And because these ones must fill out a 1099 form, okay? But I believe under that you can claim what kind of status you are, okay? So you can claim as self-employed in most cases, right? Not independent contractor or anything else. Okay, and of course, they are going to be responsible for their own personal income tax withholdings for themselves, because they're not good. The company's not going to pay for it, or the company's not going to withhold it from their paycheck. They are solely responsible to pay for that themselves, right? Very, very similar to an independent contractor, right? But the difference here is, at the end of the day, the real estate has one task and one goal. No matter who is doing the job, the task is the same. They're all in the business to sell homes, right? So at the end of the day, the result is the same for statutory non-employees. The difference between a statutory non-employee and an independent contractor, since they are very similar, well, same thing with the independent contractor, right? They act as if they are self-employed as well. The huge difference is the end result is going to be different. All right? So a great example is going to be a doctor's office, right? They all work for one company, right? But underneath that company, so for example, UNLV, right? UNLV, right? They all work for UNLV. However, every individual doctor works for that company. However, every individual doctor is going to perform a different procedure for every single one. So you can have a room full of family doctors, right? But at the end of the day, every single doctor is going to have different standard procedures that they do, right? They're all going to give you a different result. They're not going to give you the same result. So again, that's why they say, I want a second doctor's opinion, because one person will analyze one way, another person will analyze another way. So that's what I mean by having results are going to differ. Okay? That's the huge difference between the two. Statutory non-employee, they can come whenever they like, but their main goal is to get one task done. And it's the same result. Where in this case, right, if you're going to a doctor's office, right, every doctor that you see is going to have to give you a different diagnosis. Well, it may be similar, but they're all going to perform the procedures differently to come to the conclusion of that diagnosis. So in that case, that's an example of an independent contractor, right? They all work for the same company, but they can come in whenever they like, because again, clientele list, right? If someone's scheduled for a doctor, right, they come in whenever they like. They don't come in on a Monday through Friday daily basis and come in at 9 to 5 and stuff, right? They can clock out whenever they feel like it. So again, that is an example of an independent contractor. They must also fill a 1099 form and apply themselves as a contracted worker. Okay, and of course, these individuals are also going to be responsible. They don't pay into the federal taxes, but they are responsible because they are independent contractors, because you're filling out that 1099 form that gives them their 1098 form, I believe, that gives them their record of how many payments that they've been made, how much, how much money that they generated from that company, and they're supposed to take that and report it as their ways to claim the taxes and so on and so forth. So they're responsible to pay for their own taxes at the end of the year. Okay, so again, independent contractors, right? The company does not pay a dime except for whatever the task was given. Okay, all right. Any questions here? All right, last two types of employees are going to be your leased employees and your temporary employees. So your temporary employees are very, very, very common, especially here in Vegas, where we have a bunch of headhunters, right? Headhunting agencies who look for jobs for these individual temporary workers to work for, right? A temporary job is literally, it's going to be in its title, right? It's a temporary job for them to complete. Now, usually these are also independent contractors as well, but what we do here for temporary work is they're only contracted for X amount of time. So again, they're not there as a permanent position. They're only there to get the job done, whether it's a 6-month job, a year-long job, or a 2-year job. It doesn't matter. There's a time frame on it. And that's what a temporary work does. And usually they do projects, okay? They don't do regular day-to-day activities or day-to-day jobs that are necessary for employees that have, right? They usually do special projects that only require a certain amount of time frame for, okay? So again, for example, right, if they're hosting an event, right, they'll hire these temporary works to build the stage or build the meeting room, or build the convention room, whatever it is that they need, right? These are temporary labor workers. Okay? And of course, they don't pay the workers themselves. They actually pay the agency who found the employee, these workers for them. So again, many companies, right? They reach out to these agencies or these headhunters to basically find them people to work. All right. So again, for example, we do have a headhunter for accounting. It's called Robert Half. If you guys heard of it, great. If you guys have never heard of it, well, here's your chance. If you're looking for a temporary job in accounting, go to Robert Half, okay? Because yes, Robert as in Robert, and then half like you're splitting something in half, okay? And they are a temporary headhunter agency who basically finds temporary jobs, and they also find permanent positions as well too. So not only is that's why these two are very closely related, because once you get a temporary job, right, what does the company do? So in this case, right, if you're working for Robert Half, because that's the company that you're currently working for under, because you're contracted under them to complete the task, right? Whoever is paying Robert Half, which is MGM, for example, right? MGM pays Robert Half, right? They don't pay you. The agency pays the employee who's currently contracted under that temporary work agency. So again, why are these two related? Because once you get contracted, right, not only do you sign a contract through the headhunter, you also have to sign the contract with the company as well, saying that you are only contracted for this short project. What are the liability waiver forms that you have to sign? Yada yada yada. Okay, so you still have to sign with that company anyway in regards to completing this temporary task. Okay, so once you've done that, right, what happens is that the company who hired the temporary agency can buy out the contract if they think that you are a employee that is perfect to work for the company, right? If you showed up to work on time, right? Because that's also a potential way for companies to search for good employees, okay? All right, instead of going through the interview process, employing them and then firing them, they kind of use the temporary work agency to kind of see if this person is going to be able to complete the job and get the task done. So if they can do that, that's why a leased employee is going to be one of those things where you can be bought out of your contract, and instead of working for them for a short period of time, they can buy out your lease contract and be able to employ you full time. All right, but that's if, again, you are contracted to that company to work a specific project, right? We call that a leased employee, meaning you are there to do one thing, and that one thing is to get the task job done, but also to kind of show the employer that you are capable of doing the task and stuff. That's why it's a leased employee. It's a contract, right? So again, they do not need to pay the worker themselves. They just pay the company, right? And then if they choose to buy out the contract, then they would have to go into this discussion for that, all right? So any questions in regards to the 6 different employees that are not employees, but workers that exist right now? Okay, so let's finally talk about the payroll process. Okay, so here is the steps on how to initiate or to calculate payroll. Okay, so again, all right, you have an employees part, and then you have to also deal with the employer's responsibility. Okay, so again, we're going to break it down. So today we're only going to take a look at employees section, and then tomorrow we'll go ahead and finish up employers section, okay? So let's go ahead and dive into the employees section right here. These are the steps that you need to do. So let's go through all the steps. Well, first off, if you choose to have employees, this is what is most necessary thing that you have to do. You have to fill out a W-2 form, right, as the employer, okay, to the federal, state, or county department, whichever one you can go to. Most cases you would go to your county. So in this case, in the state of Nevada, we do have one. It's called DETR, right? DETR, which is the Department of Employee Training and Resources. So again, right? If it's familiar to you, it's familiar, okay? They are responsible to keep track of all employees and employment period for all companies, including including any business that is being currently ran in that county. All right. So again, the W-2 form for the employer they must fill out, which is completely different than a W-2 form that an employee gets, okay? The W-2 form that an employee gets just gives them a list of what was the track record of the payments that the person that we've made and the track record of all the taxes we've withheld. That's it, all right? The W-2 form for the employer is a form that basically says, this is what I want from my employee. This is the task. This is the job title. This is what I am going to be putting in. So again, you need to have information such as social security numbers, full legal names in there, and so on and so forth, okay? And an amount of wages and things like that. So again, this is what you have to fill out if you do plan to employ somebody. Then the second thing you have to do is you have to require your employee to fill out a W-4 form. A W-4 form is going to be what produces the W-2 form at the end of the year, okay? Right? The W-4 form basically tells the employer what you want to withhold from your taxes to the federal government, right? This is for income. All right? This is what you want to withhold from the income. Now, again, if you do not submit a W-4 form to an employer within a specific amount of time you start your job, right? You will automatically get the maximum taxes on your paycheck. So that means you're going to claim that you're a single person with zero withholdings, zero deductions, and zero everything. Okay? So that means you're going to get taxed at the maximum amount possible because you failed to submit a W-4 form. Okay? So again, what does a W-4 form do? Well, again, it allows you to claim money or take some tax breaks here and there when you actually are working for the company, right? You're telling the employer what money to take away from your paycheck and what money not to take away, okay? So let's take a look at that W-4 form real quick, okay? Okay, so again, you can get this W-4 form at irs.gov, okay? And I'll show you that website in a second, okay? So here's a W-4 form, right? You fill out your name, your address, your social security number, all right? And then this is what you're going to do. You're going to claim what kind of filing status that you are. Now, let me clarify this with you because there are a lot of changes from the W-4 form from way back when to now, okay? Back then, so we're talking about 2019 is the last time you'll ever see the withholdings as check marks and numbers that you just count, right? You're counting your total number withholdings. In this case, the new W-4 form starting from 2020, they created this since 2020. Since this new form, right, is brand new and we're in the year 2022 now, so that means you're going to be having to fill this out as a new employee. You cannot fill out any W-4 form prior to that, okay, because you can't. Now, in this case, the W-4 form, what it does is it basically lists out what taxes that you want to take from your paycheck, right? But not only that, this W-4 form takes into consideration that you have the possibility of having more than one job. Or if you are married, right, you also have to take into consideration of your spouse's income. So what are we looking here is once you establish what your filing status is, the next section is tell me everything about all the income that you earn from Everything including secondary, tertiary jobs that you have. So again, nowadays, anybody can have multiple jobs, right? Even though back then, yes, you could have the job, but now that in 2020, it's a lot more prevalent, right? Anybody can have a regular standard primary job where they go into the office from Monday through Friday, 9 to 5, right? But they can also have a secondary job where they're doing Uber, right? In other ways, the IRS is asking you for every single penny that you earn, whether it's from your primary, tertiary, secondary, those kind of jobs. And if you don't, then you don't need to fill this out. However, unless you are filing together with your spouse and you claim marital status, you need to fill in your spouse's income because they need to know how much money that your household is generating in grand total. Okay? So that's what's different about this one. Then Section 3 allows you to claim your dependents. Well, in this case, your dependents, they calculate it based on an annual amount. So in this case, they say that every child under the age of 17 is going to cost you $2,000 per year. Now, we all know children don't cost $2,000 a year. They cost way more than that. But that's just the bare minimum per year that you can withhold on your paycheck to be able to support your child. So that's all it's saying right here. That extra $2,000 per year should be enough to support your child. Okay? Now, that's only for the kids ages 0 to 17. Now, if you're claiming a dependent, because we all know, right, in this case, the government allows you to claim a dependent up to the age of 26. So remember that, okay? Now, because you can claim somebody up to 26, right? Even though, yes, 26 means that they are a full adult. They are able to generate and get their own money. Now, if you are choosing to claim them, unfortunately, they only are up to $500. Why? Because of the rule that they are the age where they can generate their own money. They shouldn't be supported by the parent by then, because by the age of 26, they should have a job or a stable job, right? Because they're considering the time frame between 18 to 24, right? Usually that's college time, right? So in this case, that's what they're doing, or schooling. So they only can allow you to claim up to $500 per dependent. Now, again, the rules may have changed over the times, but I know that you can claim up to about 10 dependents, but you don't want to do that. Yes, question.
Yeah. What if people have like children that will never grow up all the way? Are there exceptions that, yeah, autistic children, things
Correct.
like that, that are special
Yes.
needs?
Special needs also fall under the dependents, because even though, so I was actually going to mention that too, is that they might not be your children. It doesn't have to be your children. It could even be your grandparents, right? They can't support themselves, so you can claim them as a dependent. Okay? They're still $500. That's just the rule here. All right? Because again, children, right, under the age of 17 cannot, they cannot work. They cannot sustain themselves. While, yes, we understand, what about children who have autistic abilities? That's why you can claim up to 26. But again, you can that's going to be one of those rules where you can claim them, but then I'm not a tax accountant, so I don't know the full guidelines of what it is to claim someone who's disabled. Okay, but yes, you can claim them. I just don't know what those parameters and what those entail 100%. But if they're disabled before 17, then you can claim them all the way up to 26. We all know that, right? That's one of those standard rules that the government lets you do, is that you can claim them up to 26. But again, this also falls under elderly too. You can claim your elderly parents as well, right? But again, like I mentioned, I'm not a tax accountant. You would have to seek a professional tax accountant to be able to give you the full parameters of what you can and cannot do. Now, as far as this, the more money you claim on your W-4 form, the more likely you're going to have to pay tax at the end of the year. All right? Yes, there's also that one thing too where at the end of the year you can go over your taxes and you can claim your children at the end of the year instead of during the year. Okay? So there's again, the taxes are so complicated to the point where that's why people go into the profession of taxes because of this. All right? Now, again, that's one thing too. If you don't claim them now, you can claim them at the end of the year as a tax write-off. Okay? Now again, this is on your paycheck. How much money do you want to be withheld from your paycheck? Okay? Now again, if you are the head of household, you're the sole income, right? And you have 3 children, right? It's your paycheck alone might not be able to support your family. So you might have to take those extra deductions and extra withholdings to be able to support your family on a paycheck to paycheck basis. That's just the reality, right? And maybe you have to pay taxes at the end of the year, but that is circumstantial. Okay? Anyways, so that's that section there. And then of course the last section is going to include any other income. So if you own stock, you have to report it. Okay? If you have any other deductions, such as if you want to claim your house, that's where this section is here. Okay? Any other extra deductions. So if you want to claim your house, claim your house. Okay? And that is the new W-4 for you. Yes. Okay? All right? Any questions there? Okay. All right. So, continuing on here. All right. So, after you've received your W-4 form from your employees, right, the next section is now determining what your pay frequency is going to be. So, again, we call this payroll period, payroll frequency, however you want to describe it, right? It's pretty straightforward. Are you going to pay them on a daily basis? Are you going to pay them on a weekly basis? Are you going to pay them every 2 weeks? Twice a month? Every month? Quarter, semi-annually, and annually. Now, in this case, you'll never get to the point where you have to pay someone annually, okay? Those are going to be on a per case scenario, right? But most cases, when you're talking about salary, they are usually measured in an annual rate, okay? But the more common ones that you normally see are going to be things like bi-weekly and semi-monthly. Okay, so what's the difference between getting paid every 2 weeks versus getting paid twice a month? Well, if you're getting paid every 2 weeks, right, we know that there's 52 weeks in a whole year. So that means there's 2 months in the year you're going to get an extra paycheck. So that means for bi-weekly, if you get paid every 2 weeks, you get a total of 26 paychecks. Where if you're getting paid twice a month, you're only going to get 24 paychecks. Okay? Now, for salary-based earnings, you usually get paid semi-monthly because you get paid twice a month. Okay? That's just usually that I see common. Now, monthly is kind of difficult. Those are usually like if people who for instance, people who receive any benefits, so if they're already receiving Social Security or something like that, or being paid by the VA, usually they get paid on the monthly. Okay. Other things like Uber and Lyft, I know that for a fact that Uber allows you to cash out your earnings at the end of every single day, so they get paid on the daily. Okay. And then so on and so forth. But again, quarterly, semi-annually, and annually are probably not going to be payment frequencies that you will see very commonly, but I'll tell you this, that you can you'll normally see salary-based earnings as an annual rate versus on a monthly basis. Okay, so you got to figure out how often do you want to pay your employees. All right, so once you've done that, now you have to figure out how are you going to pay your employees. What kind of income can an employee earn? In this case, well, you got to figure it out. Are you going to pay them on an hourly basis, or are you going to pay them a straight amount, right? Are you going to pay them salary? So in this case, hourly rates, we all know, right? You clock in, clock out. How many hours did you do this day? Then you get paid a rate, okay? And again, here, usually all states have some kind of employment minimum wage, right? So in the case, in the state of Nevada, it's actually not 8.25 anymore. I haven't changed this yet. It's actually, I believe it's now $10. Okay, $10 is the new Nevada state minimum wage. Okay, now there are some rules and exceptions to that wage rate. If you have tipped employees, okay, or again, recipients of opportunity. So again, people who are reaping other assistance, right? They are going to be one of those exceptions to this minimum wage rule. Okay, so again, here in Vegas, right, a lot of our workers are tipped, right? Because again, we're especially on the strip, they're all hospitality. They all do service, so they are based on earning their wages based on tips, right? Now, in this case, I don't know if all companies do, but certain companies, right, they apply tips as part of their earnings, and if they do, then that's where the company can say, I don't need to pay you the minimum wage, right? I can pay you below the minimum wage because you're earning most of your money through tips. Okay? So that's going to be an exception to that rule, but again, they can still be paid on an hourly rate, right? But for your salary-based earnings, right, usually since salary, they get a lump sum money. So they get a total annual rate. So for example, they can earn $60,000 for the year, right? And what they do is they take that $60,000 and just divide it by the month's amount of paychecks that they earn, okay? And usually, so these kind of workers, right, it doesn't matter how many hours they contribute to the job, okay? It just matters on the amount of whether they got the job done or not. Okay, so they can spend 60 hours, but the minimum is, I believe, 80 hours. They have to at least work 80 hours, okay, minimum, to earn their money. But if they go over, again, it's just depending on the company policy if they allow to pay for overtime or not, okay? And of course, other earnings, again, they can get bonuses and overtime and so on and so forth. Okay, so those are compensations that that an employee can earn. Okay. Now, what about employee paychecks? Okay. What else can you put on their paycheck? Well, you can also give some fringe benefits. Okay. If you require or if you allow holiday pay, vacation pay, so personal time off, PTO, you can even pay them if they're sick. Okay, you can even have retirement benefit plans, right? So if you are looking into giving them a 401k, that's a deduction to the paycheck. Okay, and if you also provide insurance, whether it's health, dental, vision, life, whatever it is, right? Those are going to be things that you take away from a paycheck. Okay, so again, additionals are going to be things like again those extra pays, but things that you take away are going to be anything that you benefit the employee for. Okay, And how do they keep track of their records? Again, depending on what it is, whether you have an actual tracking system, they have to go into a website, clock in, clock out, or they have nowadays, right? We have phone apps that can clock in, clock out for us. If you are old style, right, you guys can have a time card where you have like a punch out time machine. You can do that where it timestamps you when you came in and timestamps you when you clock out, etc., etc. Okay? Any ways that you have a means to keep track of that. Okay? So let's talk about what are the types of taxes that an employee is subject to have to pay into. So we first talked about the federal income tax withholdings. So this is why we require our employees to submit a W-4 form, right? Because that's going to tell me how much money that I have to withdraw from their account to hold for taxes. Okay? So me, as I'm the employer. Okay? So in this case, right, that is the first federal tax that you have to pay. So the higher amount that you make, obviously, the higher taxes per higher tax percentage rate, whatever it is that you're using, will affect you. Okay? And of course, every year the IRS and the government, the federal government, changes the tax percentages every single year. So again, it's very important that you get the correct tax tables for this to make sure that when you do calculate this, that you're calculating the correct amounts. Okay. So there are two methods for us to calculate the federal income tax withholdings. Okay. Now, first off, you need to locate the tax tables for you in order for you to go ahead and complete this. So in this case, tax tables are, it's going to be called the circular e-table, which is you can find at the irs.gov. Go ahead and put in publication 15-T, and that will give you the tax tables for payroll. Okay? And again, I will have it on my screen right here, but I do believe I did provide one on the Google Classroom for you to go ahead and take a look at. All right, so again, there are two methods, the percentage method and the bracket method. I'm not going to teach you the bracket method because it is way too easy, okay? All you got to do is look up the percentage, look up the amount of money that you earn, and you look up the pay frequency and how many withholdings do you have, and you just follow the table until you locate it, and boom, you found your federal income tax withholdings. This one is rounded numbers. We don't like rounded numbers, right? We like unrounded numbers, right? We want the most accurate penny for penny amount. So in this case, we're going to be looking at the percentage method, okay? So how do I use the percentage method to go ahead and use the circular e-table? So this is what the circular e-table is. You're going to designate it by looking at which table you're going to be working at. It's going to be looking at the pay period and what kind of filing status that you've claimed on your W-4 form, and so on and so forth. Okay, so I'm going to show you real quick what the federal income tax tables look like. So here's what it looks like: the federal income tax withholdings tax tables methods for 2022. Okay, so I'm on the right one. Now, in this case, if you actually go through it, you'll see that there is more than one table, right? So how do you know which table to look for? Well, good question. You got to read what the title says and acknowledge, is this the table that you're looking for? Well, in this case, this one says percentage method using an automated payroll system. Are we using an automated payroll system? Do we have are we paying a system to do the payroll for us? No, we are not. We're looking into calculating manual payroll. So in this case, this is for QuickBooks, okay? So if you use QuickBooks and you decide to use one of their payroll services that they offer, this table is what you need to have on you at all times, okay? But again, we'll just take a quick overview of what we're looking at. Okay, so once again, I talked to you about the bracket method. We are not going to do it, but I'll explain why. Look, If you actually go through it, it gives you the direction on how to calculate all your numbers. And what it does here is literally you take a look at how much money you earn, you take a look at your filing status and what your payroll system is, right? So if you're weekly, you look at how much you're making, you look at what your filing status is, and you literally just go down the table until you find the number that you're looking for. Too easy, so I'm not going to show you that one. I'm going to show you the percentage method, okay? So again, this will go on and on. So then here's the bracket method for other ones, okay? Now, here's another thing that you also need to take a look at. Now we're at the percentage method, which is correct. Now it tells me that I am doing the percentage method for manual payroll, which is correct, for forms W-4 from 2020 or later. So in this case, right, they have it split. They have one for W-4 forms for 2019 and prior, and they have one for the newer ones, which this is our table that we're going to be using for to calculate the federal income tax withholdings, okay? So this is the tables we're going to be using, all right? So how do I actually go ahead and use the circular e-table to calculate the federal income tax withholdings? Well, we got to go through the steps again, right? So on the tax tables, it gives you a step-by-step directions on how to solve for each of the following, okay? Number one, we have to determine how much gross earnings an individual has earned. So that means you're going to calculate whether they're salary based or earning based, right? Hourly wage based, right? You need to determine how much they're going to make for that pay period, okay? Then number two is you're going to determine how much extra income you have made, right? And then also step two is also going to be deducting any other deductions that you have. So in this case, for this class, we're going to assume we don't have a secondary job. We only have one primary job, and that's it. No spouse. We're not filing marriage, okay? We're just going to keep it very plain and very simple, okay? No extra income, no extra deductions, okay? So once you add that extra amount and deduct whatever you need to do, then you're going to get your adjusted gross wages. So this is where we need to determine how much tentative withholdings we are going to do. So in this case, it's going to be based on the filing status, and we're going to use a circular e-table. So, let's go ahead and dive right into the example we have here. Okay. So we have L, okay? L is a single woman with one dependent, okay? And of course, she only has a primary job, okay? And of course, she earns $15.25 an hour, and she worked a total of 45 hours, okay? And of course, she claimed her dependent, okay? And of course, no additional deductions or extra withholdings, all right? Her pay period is going to be weekly, and of course, let's go ahead and start. So step one, we need to determine how much her gross earnings is. If she's on a weekly payroll period, okay? So in 1 week, she worked a total of 45 hours, and she's getting $15.25 an hour. So let's figure out what that calculation is. Okay, $15.25 times 45 hours is going to give you a grand total of $686.25. So that is your gross earnings. Okay, so now let's go ahead and determine step two, right? Since she has only one primary job, you're not going to add any extra income. And because she didn't claim any extra deductions or any withholdings, that's also going to be taken out zero. Okay? So now my adjusted gross earnings is going to be $686.25. So then now we're on step three, where we need to go ahead and figure out what her tentative federal tax withholdings is going to be. So this is where we're going to need to use her W-4 form. What was her filing status? In this case, she's a single woman. okay? And her pay period is weekly, and since she only having one job, checkbox number 2 is not checked, right? So that's important because you need to know which side of the table that you need to use, okay? So we're going to determine which circular E table to use. So in this case, we found the perfect one, right? We're on the weekly pay period, right? She's a single woman, right? And because she didn't claim a second job or married on her W-2 form, so that's number 2 on the checklist, right? She only has one job. You're going to be on the left side, okay? You're going to be using the left side table, okay? So now, right, we know for a fact that she earned $686.25. So how do we read this table? So in this case, that's what we got to do. We got to look at the amount that she's earned. Is it at least? So in this case, did she earn at least $241? Yes. Did she earn more than $433? In this case, yes, she did. So you have to move to the next one. So in this case, did she earn at least $433? Yes, she did, but not more than $1,000.21. Yes. So that means she earned more than $400, but she's earned less than $1,000. So in this case, this is the row we're going to be looking at. So letter C says, this is the amount of tax that the government's going to take away from your paycheck regardless of the amount that you earn. So they're going to automatically take out $19.20. Okay? Here is in letter D is going to give you the amount of percentage. Okay? You're going to get taxed at 12%. Okay? On extra income. Now, where does this extra income come from? Letter E tells you that this $433, the government lets you keep without taxing it. So any dollar over that $433, you're going to subject to that 12%. I don't know why they organize it like this, but I'm going to keep it plain and simple for you. This is what you got to do. Identify your A and B, and this is what you're going to do. You're going to subtract your E, multiply it by D, add your C. What did I just say? Well, let's break it down. Since I identified what row I'm going to be on, this is what I have to do. I'm going to take my gross earnings. I'm going to subtract letter E, which is what the government lets me keep without taxing it. Okay? So that gave me a total of $253, right? I took my $600, subtracted $400 to get me $253. Since this is extra money that I've earned in excess, I need to multiply it by my letter D, which is that 12%, right? So in this case, I take that $253.25 and I multiply it by my 12% to get me a total of $30.39. Then I need to add what the government's going to take away from my paycheck regardless of the money that I make, which is letter C, which is that $19.20. So at the end of the day, my total withholdings is going to be a total of $49.59. Okay, so that's why I don't know why they have it in that table, but it makes sense, right? If you think of it this way, you're going to subtract E, multiplied by D, add C. All right? I don't know why they had it that way, but that's how you read the table. Okay? So that's how I figured out how much federal income tax withholdings I am going to be charging for step 3 here. Now, you're not done here because in this case, this is another difference between the W-4 forms from 2019 and from 2020 and later. You actually claim your children after taxes. Okay? Let me repeat that. The 2019 is before taxes. In 2020, you claim them after federal tax. So in this case, right, step 4 is going to ask you, go ahead and deduct the amount of money that you claim for your children. Okay? So in this case, right, that means we need to determine on the W-4 form, did L claim her child? And she said she did. So in this case, we got to look on her W-4 form. Her W-4 form says she claimed one child, which was $2,000. Okay? So that means $2,000 is on her W-4 form. Now, we need to divide that by the number of payroll periods because that is what total amount for the whole year, right? That's what the government says, $2,000 per child per year. Okay? So in this case, $2,000, I need to divide it by the number of paychecks. Since she's on a bi-weekly paycheck, she's on a weekly paycheck, right? The table we're going to be using is that table that we started in the very beginning of that table, right? What tells you how many paychecks are going to be per pay period. So in this case, weekly is 52 paychecks. So that means I need to divide this annual amount by the number of paychecks that the employee is going to earn. So in this case, that means I'm left with $38.46. That means every paycheck that Elle earns, she's going to deduct $38.46 for her child that she claimed. Okay? So that means I got to deduct that from the total number of withholdings. Now, here's a rule. If the number of children that you claim exceeds the total amount that you are going to withhold, what happens is you withhold $0 because you can't have the government pay you money, right? That's the rule. Is if this was like $56, right, which exceeds the total amount of withholdings I currently have, which is the $49, right? That means I just claim my withholdings as 0. Okay? So in this case, I can subtract it out and I'm going to be left with $11.13 to withhold from her paycheck. Okay? And again, if you have any extra withholdings, right, then you deduct it there. Okay? And then that's how you solve for the federal income tax withholding. So again, it is a long process, but that is how you do it. Okay? Now imagine, why do you think it's much more easier to just pay someone else to do it? That's just one employee. What if a second employee has a bunch of withholdings that you have to calculate? What if the third employee has no withholdings? Then that one's the easiest one, right? What if the fourth employee has doesn't claim all this but has to do this, right? So again, it's a per case and per basis scenario. And think about it. 1 or 2 employees is easy to do, but once it gets past 5, how long is it going to take you to actually process payroll? And that's why it's much more easier to just pay a payroll service to do it. Okay? All right? So that's calculating just the federal income tax. Now, what else is the employee subject to also have to pay into? They have to pay into their own FICA. Okay? What is FICA? FICA is their Federal Insurance Contribution Act. Meaning, this is their Social Security and this is their Medicare. That means the employee is responsible to pay into their own Social Security and to pay for their own Medicare, so that when they are done and they retire from the company, the federal can pay them back, because this is it's like a more or less like a savings, right, for the future. Okay? So in this case, right, what do we know Social Security as? Back then, it's also identified as old age survivors and disability insurance. So again, OASDI for short, which is also very commonly known as Social Security. Okay? This is a preset percentage of your gross earnings. Okay? Not after tax. This is based on your gross earnings. Okay? So if Elle earned a total of $686, right, you're going to take that 6.2% to be able to figure out how much percentage of her paycheck is going to go towards her own Social Security. Okay? And it's going to be $42.55. So again, this is Social Security. It's 6.2% of your paycheck. Okay? Now, where did the 6.2% come from? Usually this comes from, again, your, it's just what the government says is appropriate for you to earn, especially when you can claim up. Nowadays, I believe it's 67 that you can claim for anybody that's born afterwards. 67 is the new age where you can claim your Social Security, right? And they said from the time frame from 67 to however long that you've worked up to, so they're assuming if you work from age 21, let's just say, all the way to 67, 6.2% of your paycheck over the span of that amount of time should get you up to approximately $147,000. That's the maximum cap limit of how much you can claim or put into your own Social Security. Now, you can't put your own money into Social Security, so don't forget that, right? 6.2% is the federal requirement. So if you're earning only $16 an hour, you're probably never going to get to that $47,000, right? But if you're someone who earns $60 an hour, you could probably get there a lot quicker in a short amount of period of time. So that's why this one, it's a political thought here, but it's very unequal because no one's going to get to this capacity unless they are the top 10% who are earning the most money in the world, right? So in this case, so that's what they cap it as. So every year they do change this number. You can only collect up to $147,000 worth of money to your Social Security. All right, and this should be enough money to supply you for the rest of your retirement until you pass away. All right, that's the assumption, right? Because they said that the assumption is that I believe the average age of death that people die at is about, I think, 80 or close to 85 or 90 is the maximum. So they think that from 67 to 90, this $147,000 should support them for that time being. But we all know that's not true.
Yeah, do we like now or later, Len?
But anyways, so again, this number does change. So back in 2019, it was 132,000. So we gained every year. So let's just keep hoping it keeps increasing, okay? Anyways, so then that's just Social Security, right? We haven't even talked about Medicare. Medicare is 1.45% of your actual gross earnings. Okay? 1.45%. Now, in this case, there's no cap limit. So you can, as long as you work for the however many years you're supposed to be working, right? The assumption is you're supposed to be working at least 45 years, assuming. So with that 45 years, you're allowed to collect as much money for your Medicare. Because again, medical insurance varies from patient to patient, right? Every individual, as they get older in age, they're going to have different medical needs. So in this case, there is no cap limit on how much you can collect up to. Okay? So in this case, if L earns $686.25, you're going to multiply that 1.45%, which is going to give you $9.95 per paychecks. Don't forget, this isn't for the year. This is per paycheck. So if you want to multiply it by 52 because she gets paid on a weekly basis, that will give you a rough estimate of the annual amount of money you would that you're putting into your Social Security and Medicare. Okay? So $10 a paycheck for 52, that's not that much, right? You're only doing $520 roughly, right, per year, which is actually not bad for however many years you're going to work, right? So that is those things. Now, that is just the bare minimum because we live in a state where we don't need to pay into state taxes. So that means our bare minimum that we have to take away from our employees are just our federal taxes. But if you live in a state that requires you to pay into state taxes, then those are going to be based on that state. Now, in this case, we're in the state of Nevada, so I'm not going to bother with state taxes because we're in the state of Nevada. We don't charge or we don't calculate money from state, okay? But I didn't take into consideration of any benefits or any extra deductions. So again, those are things that are also going to take away from a person's paycheck. Okay, but the bare minimum, that's a requirement that you have to take away. So even if you don't have any benefits or any deductions, you have to do the bare minimum, which is the federal taxes, which is the federal income tax withholdings, Social Security and Medicare, which is your FICA. And then, of course, once you deduct that from the gross earnings, then you'll get the total amount of paycheck that this person will earn. So in this case, after taking $11 from federal income tax, $42 out of Social Security, and then roughly $10 from Medicare, this person's going to walk away with $622.62. Right? All right. And again, imagine if someone claimed as a zero status with zero withholding, zero XYZ, right? Anybody can pay up to a lot of money just for federal income tax, but that's the benefit of that is if the more money you pay into the government, the most likely you get a tax return. The more money that you take away from the government, the more likely you're going to have to end up paying the government at the end of the year. Okay? So this is what you have to do to journalize a payment to an employee for the payroll period. Right? Okay? Any questions? That was a lot of explaining. Okay? And that's where we're stopping because the next one is going to be employer taxes. Okay? Any questions so far?